Oh, good afternoon, folks. Hey, it is Shooter Scott Henderson. Hey, I want to go over the SPY for a second, just spend a minute drilling down again, just giving you guys a visual of what I'm seeing. Of course, at the end of the presentation, please do review our disclosure. All right, let's start off with a monthly look at the S&P 500 via the SPY. So right now, the way I see this, a long stop is a weekly close below 565.27. Okay, that would be where my stop would be. Now, a couple of things in point. RSI is overshooting. It's just starting to. So this is extremely euphoric. Our RSI level for our prior mound is roughly 86.2 on the RSI. Our prior high on our divergent high, which is our confirmed high in price, was 95.6. Basically, we can take the spread between that 86.2 and that 98.6 and divide it by 2, and that's likely we're going to nudge. So there's a very good possibility we end up somewhere around 88 to 90 in RSI on this leg up. Now, some other tools that I've learned to use, bell curve, right? And prior points really determine the slope. Right. So if I exclude the Corona crash, right, we end up with a curve leveling somewhere around 783. However, I include that, it actually extends up a little bit further to probably about 8. Well, no, actually, it's going to go a little higher than that. Probably about 809.25 for some form of equality. All right, so let me just drill down a little bit further here. Let's come down to our weekly look. Same thing, but took a few things off, added a few things in. Just to give you a visual. First of all, first golden box is what we are completing now. We are now pushing towards the 61.8 Fibonacci extension. I don't see any reason why we shouldn't tag it here because we are euphoric enough. We're seeing the FOMO come in. Now, looking at the weekly, just looking at our mound structure, our mound structure from our low is mound 1, right? To our initial, we had an impulse leg up, a corrective leg down, and now we're competing a next set of multiple. We had a shallow primary wave, then a shallow flat, and now we're putting in another primary wave up here. Or it should become another primary wave. So our second mound is here. Well, quite often what we get is a third mound. So what I do is I work on, likely outcomes. There's, we can look at a chart and say, hey, this is A scenario, this is B scenario, this is C scenario, etc. Right now, I only really see 2 scenarios. Until we close below that 565, because I think when we get up to this 609, I think we have a very shallow retrace and we keep going. And there's a very big possibility that we shoot towards that 800. So I think the most likely outcome is what we refer to as the 535. So we got our 5 here, a 3 here, and then another 5. The most likely outcome is a shallow 5, not an extended or an elongated 5 like we have over here. So we'll get this correction from like 607 down to about 540, right around trend support. Trend support here should hold, or it bounces off of this, support. This is prior resistance or our band here that we just broke out of. So that theoretically should become support. However, we have one more leg lower of support, which is pretty solid at that 510.27, I believe it was. That should keep us up. We should not get back below the 382 fib, regardless of how much bearish scenarios come into the chart at this point. However, trade your levels, trade price. If we're starting to see that kind of market where we're going to come off, we will. However, the stimulus that's coming out of China, typically a 2 to 6 week time frame from the time they print it. And Friday, I think it was another 300 billion, and we're just now in this push starting to see pieces of their first, cash flow in, their stimulus coming in. So, we've got, 2 to 6 weeks of that to win, and they're probably going to do it again. So, this is where my thought is both in crypto and in indices is it's going to flow to where the FOMO is like it's always done. It just does that. So right now, the Mag 7 is sort of dragging, so everybody's sort of chasing the major players in the S&P. So stocks like Apple could get a decent bid here. just because they're the FOMO stocks. That's the way, or the history tells us about traders and investors from China. So right now we're looking for this wave 3, 597.51. And you know what? The reason the wave's not over there is I stole it to put it over here. Hold on a second. Okay, sorry, it made my other waves disappear, so we're not doing it that way. There is a primary wave 3 here at 597.59. Then our back test which is a primary wave 4, which is on the chart. It's not showing here because I'll have to delete these for it to stay and visually, but I want to see these for the purposes of this video. So about that 576. So if you missed this, around that 576 is where you can sell some cash here puts on this, because I do think we have continued upside towards about 654 minimum, and then we have upside here on our target wave at, I gotta move my little box for a second, at 799.79 to the upside. So here again, just reviewing this, we're in the completion of our first golden box 1. We have 5 potential golden boxes to the upside once we measure, all right? So this could just be the beginning to a huge rally. If China's stimulus, and just giving you a scenario, China's stimulus counters the Fed, right? The Fed cuts again aggressively, right? China comes back and brings in more stimulus, counters the Fed again. The Fed cuts aggressively again. And what do we have? We have the perfect world for a FOMO rally where we could extend much higher than all people could conceive without the knowledge of Elliott wave and how Fibonacci extensions apply to those waves and how extreme we can get in our pushes. And, for example, RSI in this leg should keep, we should get a wedge here. Actually, let me just put up a line there. So this should be our high. And notice how far our wedge goes down. It's like any other wedge. The completion of the wedge puts us all the way out potentially to January 26th before this rally ends. So we hold up here, we hold that 565.27. This is the rally. This is it. Okay. Some of the folks out there calling for a blow off top, this is it. Okay. I now see it in the charts. I see it in the counts as a very viable potential with a FOMO here. And I wanted to share it with you guys. So the scenario is to get to our second golden box. The rule is, or the thesis with the strategy that I have, is we must close above the 78.6, 62.72, and stay above that for a weekly close. Then our second golden box is in play, which is way the heck up here. Put my little thing back over to the right. So our second gold box, the 150% fib puts us up to 966. So this rally could just keep going, and there'll be nothing that slows it down once it gets into those final bell curves. And with that, let me jump back to the monthly look and talk about that bell curve that we have up here. Now realize that is something that I use it more for a visual on my part so I can see, roughly where we are. So this is what I refer to as equality. In other words, that's the most likely outcome for equality. So that means we can extend 25% of that bell curve easily to the upside. Puts us at 1,061 second golden box to 75%, which puts us in the fourth golden box up around 1801. I don't think that happens in 2026. And when I finagle around with a bell curve to get that to work, it's still in the range. It's not such an outlier event at this point that it's not possible that it could happen. But I mean, some real extremes exist right now in the FOMO that we're seeing in this market. And I just wanted to bring that to your attention. So manage your stops very aggressively and know where your re-entry points are in the symbols that are in play. And that's going to be the game here. The game is going to be rotation. So we want to identify the stocks that we're going to rotate into. Like, for example, cryptocurrencies, I think we're going to rotate in. For example, industrials, I think we're going to rotate into. All right. I think we're going to rotate into utilities too a little bit. And then consumer staples, I think will do real well around the holidays because there's so many promos going to come up here because all the retail stores are a little concerned about how much incentive the consumers have to buy now. Hey, if we have deflation coming, why should I buy the refrigerator now when it might be $700 less in 5 years. Ultimately, once the consumer gets the perception that deflation is coming in, it roils the markets in different ways. And I'm just trying to present the storyline that would suggest that plays out for us. But that's what I have for this video, folks. Great trading. Until next time, please like and share this video, and please ask any questions you may have. Have a great day.